Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Saturday, September 23rd, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we shine a spotlight into the shadowy corners where power and currency collide. From a high-stakes game of acquisition chess with Coinbase and FTX Europe, to Russian central bank maneuvers that could redefine geopolitical alliances, we're pulling back the curtain. Stick around, you won't want to miss this. Coinbase recently held talks to acquire FTX Europe. And apparently, Coinbase's interest in FTX Europe wasn't just a casual flirtation. It was a calculated move aligned with their ambition to expand their derivatives business. For those who have been living under a rock, derivatives are financial contracts whose value is pegged to an underlying asset like Bitcoin. They're a big deal, especially in a market as volatile as crypto. Now, why FTX Europe? The platform had something that caught Coinbase's eye: a license to offer perpetual futures in the European region. These are highly popular derivatives offerings, and FTX Europe was the only firm with the legal clearance to offer them. That made the platform a hot property, attracting attention from several potential buyers, including Crypto.com and Trek Labs. But here's the kicker. As we all know, FTX Europe was only on sale because its parent company declared bankruptcy last fall. Despite this setback, the platform had been adding tens of thousands of users and operated under a Cyprus regulatory license. It's clear that its derivatives business was highly profitable, making it a juicy target for acquisition. Coinbase's interest in FTX Europe was so strong, they considered the acquisition twice. Once right after FTX's bankruptcy in November 2022, and again in September of this year. However, talks never reached a late stage, and as of now, Coinbase is no longer pursuing the potential deal. So what does this mean for crypto? Well, for one, it shows how crucial derivatives have become in the crypto trading landscape. Data from Keiko Research indicates derivatives volumes was 6 times larger than spot volumes in the second quarter of this year. That's massive. While Coinbase's acquisition talks may have stalled, the story is far from over. The derivatives market is heating up, and FTX Europe remains a high-value target. Derivatives may be heating up, but hold tight. Our next story turns up the heat on crypto security. Got an OpenSea account? You're gonna want to listen closely. Now, here's a situation that's causing ripples in the NFT marketplace. OpenSea's recent API key scare. Now, this isn't just about OpenSea, it's a tale for the entire crypto space. Let's start with the facts. OpenSea, a leading NFT trading platform, issued a warning to its users about the safety of their API keys. This move comes after Nansen, a blockchain data analytics firm, disclosed a security incident. Nansen revealed that one of its third-party vendors suffered a security breach affecting 6.8% of its users. The breach allowed hackers to gain admin rights to an account used for customer access. Now, why should you care? Because Nansen's third-party vendor is an established company that manages data for Fortune 500 companies and other crypto industry players. OpenSea is also a victim of the same data breach. The platform sent an email to its users warning that their API keys may have been exposed. OpenSea asked users to replace their existing keys with newly generated ones. The current keys will expire on October 2nd, 2023. So what's the big deal? Your API key is like the key to your digital home. The platform has yet to make a public statement, but the crypto community is already buzzing with concern. Now here's where it gets interesting. OpenSea's email suggests that the new API keys will have the same permissions and rate limits as the old keys. But the question remains, how secure are these new keys? And what steps is OpenSea taking to ensure that this doesn't happen again? The incident raises red flags about security measures in place, not just at OpenSea, but across the crypto landscape. If established platforms like OpenSea can be hit, what does that say about the smaller players in the space? The absence of a public statement from OpenSea adds to the concern. Transparency is key in times of crisis, and OpenSea's silence is deafening. It's crucial for platforms to be upfront about such incidents to maintain user trust. Alright, switching gears. From shaky security to ethical questions, our next story serves a dose of controversy. Stick around and let me know your thoughts by leaving a comment below. Ben Armstrong, formerly known as Bitboy Crypto, is in hot water. Further, he's asking for XRP donations for his legal battle. But here's the kicker. His XRP wallet reportedly holds over 161 million tokens, worth at least $82 million. Armstrong shared his XRP address and tag on social media. He's facing a lawsuit against his former partners from Hit Network. The man claims assets seized by the company belong to him, and now he's asking for donations. Payments have been flowing into this address, but the community is skeptical. The address in question has been active since February 19, 2023, and has seen a consistent daily payment flow with a spike of over 5 million XRP and 181 payments on September 5th. After Armstrong posted the address, the number of payments slightly spiked, but not the volume. This indicates smaller transactions, usually seen from donations. Now let's talk about the reaction. One user said that it's disgusting, their words, to ask for hard-earned money while holding $80 million in XRP. Others believe that the address is a centralized crypto exchange address. Why? Armstrong shared a tag with the address. This could mean that it's not his personal wallet. But if that's the case, then why use a centralized exchange? A user criticized Armstrong, saying, quote, "So you let someone else custody all your crypto. Ledger Nano is less than $100, you clown." Armstrong defended himself, stating that he lost all his XRP on Celsius. He blamed his CFO, Timothy Shedd, for losing $3 million in crypto on Celsius. This move led to more community frustration, as Armstrong had previously promoted the now bankrupt crypto lender. So what's the story here? Is Armstrong scamming his followers, or is there more to it? One thing is for sure, the community is not buying what he's selling, and neither should you. Because Armstrong's plea for donations while allegedly holding millions in XRP has struck a nerve. It's a glaring example of the ethical gray areas of the crypto world. If Armstrong does hold that much XRP, asking for donations isn't just in poor taste, it's a slap in the face to every small investor who ever believed in him. From one ethical quagmire to another, let's pivot to the political arena. Get ready for a tale of irony that'll make your head spin. Remember, if you're liking the show, hit that like button. Let's take a look at the irony-laden case of U.S. Senator Robert Menendez. A vocal critic of Bitcoin, Menendez now faces federal bribery charges. The indictment alleges Menendez and his wife accepted significant bribes, including gold bars and mortgage payments. The charges could land him in prison for 20 years. Menendez has long criticized cryptocurrencies. He accused them of enabling criminal activities and evading U.S. sanctions. Yet the senator himself now stands accused of accepting hundreds of thousands of dollars in bribes. The indictment claims he used his position to benefit various New Jersey businessmen and even the Egyptian government. The senator is accused of providing sensitive U.S. government information. He allegedly protected Egyptian-American businessman Wael Hannah and the Egyptian government from potential investigations. He's also accused of interfering with an ongoing investigation into businessman Jose Uribe in New Jersey. The indictment reveals that a search warrant uncovered over $500,000 in cash, a luxury vehicle, and over $100,000 in gold bars at Menendez's residence. Prosecutors are also seeking the forfeiture of these assets. This is the same man who, in 2017, wrote to FinCEN about the, quote, anonymous nature of Bitcoin transactions being an ideal choice for criminals. Menendez co-sponsored the Accountability for Crypto in El Salvador Act, or ACES. He warned that El Salvador's adoption of Bitcoin could create risks for cybersecurity and economic stability. He was also among the politicians who criticized Facebook's now defunct stablecoin project Libra, calling it the Wild West of cryptocurrency. This isn't his first brush with the law. In 2015, he faced charges for accepting improper favors, including private jet flights and luxurious hotel stays. The indictment also states that Menendez recommended an individual to the president for the role of U.S. Attorney for the District of New Jersey, further abusing his power. This is a glaring example of the hypocrisy that exists among some of our elected officials. This case shows that while cryptocurrencies are often demonized for their alleged association with criminal activities, traditional forms of corruption and bribery are still very much alive and well, even among those who are supposed to uphold the law. The irony here is palpable. Senator Menendez, a man who spent years criticizing the crypto space for its alleged association with criminal activities, now finds himself embroiled in a scandal that involves traditional forms of assets, gold and cash. It's almost poetic justice for a man who's been so quick to point fingers at the crypto community while allegedly engaging in bribery and corruption himself. What's even more intriguing is his involvement with the Egyptian government. While he's been busy scrutinizing how cryptocurrencies could potentially empower foreign actors to evade U.S. sanctions, he himself is accused of providing sensitive U.S. government information to Egypt. This raises questions about his credibility and the double standards he seems to uphold. The senator's legal troubles also cast a shadow over his legislative efforts, particularly the ACES Act, which aims to investigate the risks associated with El Salvador's adoption of Bitcoin as legal tender. Given his current situation, one has to wonder how much of his legislative agenda is driven by genuine concern for public welfare and how much of it is a smokescreen for his own questionable activities. This case highlights the need for skepticism when politicians make sweeping claims about technologies they clearly don't understand, especially when they themselves are not above reproach. But the irony doesn't stop there. Our next segment takes us to Venezuela, where a notorious prison turns out to be a crypto mining hub. If you're as intrigued as I am, make sure to subscribe and share this episode with your friends. Venezuelan authorities seized Bitcoin mining machines from a notorious prison. The Tocarón prison in Aragua state, controlled by the feared Tren de Aragua gang, was raided by 11,000 troops. This marks the first time Venezuelan authorities have targeted this powerful criminal organization. The raid wasn't just about weapons. While they did find rocket launchers and grenades, authorities also found a cache of Bitcoin mining machines. Now, why would a gang run a Bitcoin mining operation in a prison? Well, Venezuela's hyperinflation and near-zero electricity costs make Bitcoin mining more profitable than the global average. Many of these machines were older versions, casting some doubt on their profitability. The gang has been using the prison as its Latin America headquarters for years. It's not really a prison, it's more like a fortress with amenities like a swimming pool and a mini-zoo, even a restaurant. 4 prison guards were arrested, suspected of aiding the gang. While electricity is cheap, Venezuela has been cracking down on crypto mining facilities due to frequent electricity blackouts. A temporary ban on mining was imposed in March, following allegations of corruption involving state-owned oil firm PDVSA. This is the same country that once promoted crypto mining and even announced plans to back its national cryptocurrency, the petro, with barrels of oil. The raid also led to the evacuation of 1,600 inmates to other locations, although some managed to escape. The prison's facilities, installed by the gang, were not just for leisure. According to their Interior and Justice Minister, gang leaders kept other prisoners in a kind of slavery. The fact that the prison had amenities like a swimming pool and a mini-zoo indicates the level of control these gangs have. It's a grim picture of how criminal organizations are becoming increasingly sophisticated, using technologies like Bitcoin to further their operations. This event should serve as a wake-up call for both regulators and the crypto community. The decentralized nature of cryptocurrencies can be exploited for criminal gains. Therefore, a balanced approach to regulation is essential to prevent the misuse of these technologies. If you're skeptical about crypto in the hands of criminals, wait till you hear about crypto in the hands of governments. Our final story of the night dives into Russia's CBDC roadmap. Fasten your seatbelts. Russia's central bank has laid out its roadmap for nationwide adoption of its central bank digital currency, the digital ruble, by 2025. The Bank of Russia sees the digital ruble as a modernization effort. Olga Skorobogatova, the first deputy governor, stated that the digital ruble will be an additional payment method. It will coexist with existing options like the faster payment system, mirror payment cards, and even physical cash. The digital ruble could become a channel for state payments. Imagine receiving your government benefits exclusively in CBDC. This isn't far-fetched. Russia already has a state-controlled card payment system, the mirror payment system. This was implemented to dodge potential U.S. and European sanctions. It's almost like they knew that they were going to do something to get sanctioned or something. The Bank of Russia has no plans to replace physical cash with the digital ruble. It's a stark contrast to China, which has already started paying civil servants in the digital yuan. The Bank of Russia is even looking to establish agreements with India, China, and the UAE for cross-border transactions using the digital ruble. Now, if you've been listening to the show for a while, you've heard me talk about BRICS. All 4 of those nations are a part of BRICS, which seeks to eliminate the dominance of the US dollar. Now, why is Russia going to keep cash on hand, so to speak? This could be because Russian officials admit that CBDC trials can only be conducted with nations that are technologically capable and friendly. That's a limitation, but it also reveals the geopolitical chess game at play here. Now let's talk about privacy. The digital ruble is not linked to Russia's efforts to collect biometric data. However, the country has separate projects that do involve collecting facial scans and fingerprints from citizens. These are two separate initiatives that have led to an increase in scams related to the digital ruble and biometrics. Fraudsters have been urging people to provide biometric data to convert their cash ruble savings into CBDC tokens. The Bank of Russia's move to adopt a CBDC by 2025 is a calculated step in modernizing its payment infrastructure. While the digital ruble will coexist with physical cash, its introduction raises questions about the centralization of financial systems. China's use of the digital yuan for state payments could be a blueprint for Russia, but it's something of a mixed bag. On one hand, it could streamline transactions, but on the other, it could give the state more control over its citizens' finances, which might not bother Russia one bit. The international agreements Russia aims to establish for the digital ruble could be a geopolitical maneuver. It's not just about modernizing payment systems, but also about creating alliances that bypass traditional financial systems, which are often influenced by Western powers. This could be a strategic move to counteract sanctions and increase Russia's financial independence. The scams related to the digital ruble and biometrics are a warning sign. They highlight the risks involved in adopting a CBDC, especially when the public is not fully educated about it. This could be a significant hurdle for the Bank of Russia, requiring robust public awareness campaigns to prevent fraud and build trust in the digital ruble. So, what happened? Coinbase almost made a move to acquire FTX Europe, signaling the exchange's interest in expanding into crypto derivatives. Though the deal did not materialize, the saga is far from over, and other players are eyeing FTX Europe too. OpenSea's API scare shook the crypto community, raising concerns over how secure our digital keys really are. OpenSea's relative silence has only fueled skepticism. Former Bitboy crypto Ben Armstrong asked for XRP donations for his legal battle, all while allegedly sitting on a fortune in crypto. His plea has the community questioning his credibility and ethics. U.S. Senator Robert Menendez, long a critic of cryptocurrencies, now faces federal bribery charges. The indictment has many wondering about the credibility of his past and future legislative efforts. Venezuelan authorities raided a notorious prison, finding Bitcoin mining machines among other illicit items. Lastly, Russia's central bank is taking steps towards a central bank digital currency, raising questions about privacy, financial independence, and geopolitical alliances. As we wrap up tonight, it's clear the lines between power, currency, and technology are increasingly blurred. The unfolding events are not isolated, they're part of larger trends that will shape the future of digital assets. Whether it's the complex ethics surrounding crypto personalities, the vulnerabilities in our digital infrastructure, or the geopolitical maneuvering around CBDCs, each development has far-reaching implications that will resonate throughout the crypto community, for better or worse. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.